Hi, and welcome to the Midday Market Update for August 11th, 2020. My name is Kevin Hill. As always, beside me here is Michael Vincent.
Yeah, how you doing, Kevin?
I'm doing great. This is our interactive Tuesday, Thursday, noon market update for the freight markets. And where can they find us live?
Oh, yeah, well, FreightWaves, LinkedIn, Facebook. Get your comments, questions in. We got a great show. We got Frank Adelman, CEO of Transflo, talking about e-bill of ladings and e-PODs and a new partnership that they announced earlier or late last week, I think it was.
With KBX Logistics. And then we have Andrew Lockwood from Suddath Global Logistics talking about the final mile. And we're going to talk about what drives profitability in the final mile.
Yeah, absolutely.
And those guests come on at the bottom of the hour. Going to the end. But first, as always, we're going to start with the news with Andrew Cox, and then the freight markets with Zach Strickland, our Director of Freight Market Intelligence. And we're going to talk about the economy, consumer confidence, small business confidence as well. Yeah. With our Chief Economist here.
Relatively important things, right?
Relatively important, you know.
Yeah,
we have a hot freight market, so we'll kick it off with the news headlines from FreightWaves.com and our market research analyst, Andrew Cox. And I think we have an earnings release for a top headline today from Covenant. Is that right?
That's right, Kevin. Some more earnings news, this time out of Chattanooga-based Covenant. They reported better than expectations in Q2. Their non-GAAP earnings came out to just 3 cents per share, but this beat analyst expectation of 1 cent per share. Revenue also beat expectations by nearly $13 million by generating about $191 million for the quarter. Covenant did see revenue decline similar to industry peers, but CEO David Parker said the relatively weak performance of the company in Q2 was secondary to the other changes that the company made. For example, Covenant took $35 million in charges as a part of its strategic overhaul, which was offset in part by a gain on the sale of a terminal. Parker said that the net financial impact of these actions negatively impacted the company's quarterly results. He also said that these changes are going to continue through the end of the year. They are extensive, and he expects more cost to come from them. As where many of the other industry peers were able to keep their expenses in check in Q2, Covenant, this was not the case. It saw operating expenses rise nearly $10 million up to $220 million in Q2. And Covenant's earnings call is happening right now, so we're going to continue to update the story as we get information. Just be tuned to FreightWaves.com for all the latest on it.
Yes, John Kingston will have the earnings call update coming out on FreightWaves.com as soon as that finishes. In the press release, was there any information about or any color to the rise in expenses for Covenant?
Yeah, they really are spending across the board on a strategic overhaul. They are not only looking to divest some assets, which they did with that sale of the terminal, but they are looking to upgrade fleets. They are looking to upgrade many parts of the business. So it's an extensive change for the company based here in Chattanooga.
Yeah, so they're spending some money and spending some time restructuring during this as things happen that are causing expenses to rise a little bit, but preparing themselves for the future, which is what you want to see, right? Is that pretty much what we take away from it?
I think so. Andrew?
Yeah, I mean, there's another Chattanooga-based company that we saw spend a lot of money towards the end of last year that things are seemingly working out, and that's U.S. Express. They may be trying to follow a similar path of overhaul here. They've worked so far.
All right, so switching gears a little bit to drivers and driver safety and kind of Samsara's studies on kind of when accidents happen. What do we have on that, Andrew Cox?
Yeah, some very interesting data out of the Internet of Things provider, Samsara. They say that commercial vehicle drivers are more likely to engage in unsafe driving behaviors at the beginning and the end of their shifts. And when I read this article, it made a lot of sense to me. I thought back to when I was in driving school, and they gave me this crazy stat that nearly 70% of all passenger wrecks happen within 10 miles of one's destination. So it seems like people lose a little bit of focus towards the end there, and that is seemingly the same for commercial drivers. But also some other data from Samsara says that passenger drivers are speeding more frequently because the roads are far less congested right now due to the COVID-19 pandemic. And they went on to say that it's not just passenger vehicles doing this, it's also commercial vehicles. They say the reduced roadway congestion has led to a 20% increase in severe speeding among commercial drivers. To complete this analysis, Samsara sampled its data sets going all the way back to January 1st. The data includes more than 2 million incidents of high-risk behavior obtained through G-force measurements and artificial intelligence data gathering. There's really a whole slew of other data points included in the article written by Brian Strait. Hop over to FreightWaves.com and see all of those insights.
Yeah, I remember that from driving school as well, Andrew, is that the most accidents occur within 10 miles of leaving your location or getting to your destination.
Yeah, it was. They spoke about home or near the home, right? Familiarity. You tend to think that there's not going to be these anomalous events, that type of stuff, right?
Kind of relax.
You kind of relaxing.
And basically not pay as close attention to detail.
Right. When I was reading this and going through this information, it was interesting to me because we heard this early on that actually with less congestion, there's more extreme speeding, right? And because you're paying less attention, and you can go faster because you're not being slowed down.
Yeah,
there's not as much congestion, so you're just kind of cruising, going, there's nobody here. You're just kind of cruising. But also on this, they talked about the percentages at the beginning, Andrew, and they talked about them at the end. And I liken it kind of to, it's basic human psychology, right? I mean, if you just liken it to a college football game, which may or may not happen this year, unfortunately, probably not. But you see in the beginning of a big game, right? They all want to get at it. They're making mistakes. The energy's real high. Let's get after it. It's kind of like driving a truck, right? You're going at 700 miles. Let's get it going. Blah blah blah. You're rushing. Then you got to get into the groove of things and then you got the end. Can't wait for it to be over. Plus you're tired. Plus you're more heavily congested because you're probably inner city in many cases trying to make that delivery, right?
Yeah.
I mean, it kind of makes sense.
It does. You can do the same analogy with the midday market update as well. You come out of the gate strong, then you get into your groove.
You forget what show it is, what day it is.
I know, right?
Yeah, right. Very good analogy, Kevin. I love it.
So let's talk a little bit about climate change and the trucking industry. What do we have from Linda Baker on FreightWaves.com, Andrew?
Yeah, Kevin, Linda Baker reports that historically trucking fleets have invested in alternative fuel vehicles as a way to reduce their total cost of ownership, but now environmental factors are now driving the investment towards zero-emission vehicles. And that's just one of the key takeaways from a report released just this morning, providing an overview of the most common sustainable fuel platforms for medium and heavy-duty commercial vehicles. Sponsored by Daimler, Penske, and Shell Oil, some major players in the industry, the state of sustainable fleets includes sales trends, projected vehicle development timelines, and cost projections for the infrastructure to build out the already growing renewable energy grid. But much of the information led to a very familiar conclusion. Trucking companies are stepping up the adoption of alternative fuel vehicles, but the large upfront cost and the lack of infrastructure remain major barriers to adoption. Some other takeaways from the report include that sustainability is the top motivation for carriers, and that clean energy is more than just a trend, it's here to stay. And it also gives some examples of how renewable fuels can perform compared to their fossil fuel comparisons. And again, there's a webinar this afternoon, so this is another developing story. We're going to continue updating this story after the webinar this afternoon.
So I want to ask you both this question.
Yeah.
What do you think the biggest holdup is? Because I have my opinion or my choice, and it's infrastructure. I think the infrastructure challenges of, whether it's electric or hydrogen or, helium or whatever it is, right?
Yeah.
Natural gas is that the infrastructure and the fueling stations is a huge obstacle, and I think it might be the biggest obstacle. What do you think? And then we'll go to Andrew.
Yeah, let's go with me first because he's smarter than I am. I'm with you.
That is true.
I'm with you.
He's smarter than me, too.
Yeah,
He's
I'd like to talk before he does, because then I'll just say, yeah, what he said. I tend to agree with you now. It's a lot of it is infrastructure. In the past, I have a number of years on me. It has really been the attention of the public and the attention of and the pressure on that the public puts on these companies and the desire for these things. Right? There was a time when smaller vehicles, because oil and gas was so expensive, that went away. Then you had General Motors, and so we're not making sedans. We're only making big trucks. Right? It's kind of the mood that's going on. I contend that infrastructure is one of the biggest things. It's not that mood swing anymore. And I'd like to hear about the support for it, too. Why is there such a support for it as well? Because I have my theories on that as well. But Andrew? What do you think are the biggest hurdles?
I definitely say that the infrastructure is the biggest snag, but I'd also make sure that everyone knows about the expectations that we're setting for these vehicles. We're a long way off from these vehicles being able to travel 600, 700, 800-mile ranges. These alternative fuel vehicles are much more suited right now for regional runs or for drayage runs, local runs. I think that should be the main focal point and not focusing so much on taking these cross-country, because we're much farther away from that because of the infrastructure and also because of just the sheer battery power that we're at right now.
Yeah, I don't disagree with that. I mean, and that's what you're seeing when we talk to all these different the alternative fuel type companies, and we talk to a lot of those electrified chassis, et cetera, and that type of thing. It is definitely growing more in the local segment as opposed to autonomous vehicles, which would be long haul type of, would be the first thing, right? Yeah. Now, Andrew, I wanted to ask you, and Kevin as well. These are more in your wheelhouse kind of type of question. Is the pressure from financial institutions, investors, et cetera, stock analysts on they're putting more and more importance on? I want to talk about social responsibilities, right, and sustainability, et cetera. Is that pushing this as well? Is that a major factor?
Yeah, I would certainly say so. The big need to invest in ESGs, the social investing, I would definitely think that that's making a push. Like Linda Baker said in the thing, historically it was simply a cost. Now there's pressure from the outside. There's probably pressure from younger people like me that are working in the industry, working in their companies that are now pushing them towards that. I would definitely say that the overall push as a country to catch up with the rest of the world on a fossil fuel usage standpoint is definitely pushing these people.
Yeah, no, I agree with Andrew.
Yeah.
Definitely. I think it used to be a cost, just like Linda said in her article. It used to be basically a cost-benefit analysis.
Yeah, right.
And now it is social responsibility. You see a lot of pension funds, institutional investors, people controlling a lot of wealth out in the public and private markets who are pushing social consciences, which is a good thing.
Right. Absolutely.
And you're seeing the effects of that with alternative energies, not just in trucking, but throughout the economy and in several different industries, manufacturing. You're also seeing in oil and gas. I think Shell, was it Shell that was a big part of this study that Linda's referencing and Andrew's referencing in the article.
Andrew, you got some input on that?
Yeah, just the last point I wanted to make, let's not forget about the cost of that can be gained with the regulatory credits that you gain from translating your fleet. We saw Tesla sell nearly $500 million worth of regulatory credits last quarter. That obviously is not going to happen for a major carrier. But they can make a substantial revenue gain by selling their regulatory credits that they would gain from switching their fleet over. So don't forget about that cost saving as well. That could be another motivating factor.
And how much, this question's for Andrew, because he's doing, for the Carrier Summit next week, August 19th and 20th, he has a segment on attracting younger drivers to the industry and what recruiting and trucking companies can do to do that. Do you think sustainable energy, alternative fuels is maybe a selling point for the younger generation coming into driving jobs?
Yeah, I would say absolutely for many reasons, but the one that comes to the top of my mind is just the simplicity of the truck. You're taking a truck that's got hundreds of moving parts, and when you translate it to an electric or a hydrogen truck, you're reducing the amount of parts, you're reducing the amount of maintenance that's going to happen, you're reducing the amount of downtime that they're going to have to spend on the side of the road fixing their truck. So I think all of these are elements of this sustainable energy thing that definitely would attract younger people to the industry.
Yeah, exactly. Let's get to the final headline, which is a tragic case that happened a few years ago, I think, back in 2017, and a death on the highway from a driver.
Yeah, Kevin, we have a sad story about a sentencing here of a Colorado-based truck driver who got sentenced just last week in a Kansas courtroom to 5 years in jail for a crash that happened back in 2017 in which he killed 5 people. According to numerous press reports, the 59-year-old truck driver, Kenny Ford, was behind the wheel of a Freightliner when he failed to slow for stalled traffic on Interstate 70 in Kansas near Bonner Springs. Prosecutors said Ford did not slow down as he approached the stalled traffic. He pleaded no contest to the 5 counts of vehicular homicide, according to news reports. There was no evidence of drugs or alcohol in the system at the time of the crash, and according to the Kansas City Star, one of the victim's wives told the court that she knew Ford had no intent to take someone's life that day, but his recklessness couldn't go unpunished. He changed so many lives that day, and thinking that he may be able to walk out the courtroom serving little to no punishment is heartbreaking, she said. The Leavenworth County Attorney Todd Thompson said in an email that the sentence was as stiff as a sentence one can get for vehicular homicide. The sentence is actually 5 consecutive 1-year sentences that will be served again consecutively.
I think there's a warning for all of us behind a wheel, whether it's a truck or your car, is to always pay attention to the road. I know there's no drugs or alcohol involved, but and maybe not any texting or distracted driving, but there's something it's been a real issue for the last several years is texting and driving, and distracted driving. But that should be a stern warning for all of us. If you're not paying attention and that happens.
It is, but I have two sides of it. I mean, I definitely feel for the families. Mm-hmm. If it was my family, I would obviously it would be very, very upsetting, and I feel for those families. But I'm not a vengeful guy, and 5 years in prison doesn't help those families whatsoever. Comfort in vengeance, I don't think is a good thing. There had to have been some other type of thing there. There was no malicious intent.
Sure.
There was no drugs, alcohol, impairment. Some of the details that were in there that I read that maybe led to this was that there were construction signs for miles that he completely ignored and went through, and maybe that's part of it. But sentencing just for vengeance is not something I mean, it's a tough one of those tough stories for me because I feel for those families. But 5 years in prison because he made a mistake. We all make mistakes, my friend.
We do, and I agree with you 100% on that. But the best way to avoid the best way to avoid that is pay attention, right?
And I'm with you. That's, Amen. Yeah, you're preaching to the choir, my friend. I'm with you there. The other interesting thing that was in there was they've also filed suit against Daimler as if they had something to do with it. I don't understand that. The truck manufacturer somehow was at fault here. I don't get that at all.
Well, thank you for those headlines, and you can find all of these stories and much, much more on FreightWaves.com. And
absolutely.
Next up,
we got Zach Strickland, our Director of Freight Market Intelligence, going to talk about what's going on. Did the volumes fall off a cliff, Zach, or what's going on, brother?
No, the OTVI did not fall off a cliff. As you know, we actually broke through 14,000 for the first time ever in the history of the index. Since March 1st, 2018. We've never been this high before. We went over 14K yesterday. Again, part of a long-running trend of increasing volumes originating since about, I would say, late April, early May. That's when this unprecedented climb in volumes has started. And there doesn't seem to be any slowing in sight, at least in terms of volumes. Now, the interesting aspect of all this is that we actually have seen a 4-day decline in tender rejection rates. So volumes are increasing while rejection rates are coming down over the last 4 days or so. So, it begs the question of, are we starting to see some sort of normalization in terms of capacity? Are carriers able to, really accommodate some of these shippers a little bit more? Are they getting nervous about the sustainability of this increased amount of volume? There's a lot of questions out there right now over, whether or not this is more about what type of freight is being tendered right now, or is it, a fundamental change in the market dynamics?
Yeah, it's interesting when you have OTRI going down, but the volume still going up. Is it technology that is going there? I mean, later on we're talking to Frank Adelman, who's president and CEO of Transflo, right? And here, Kevin. So we're and Zach. So here's technology, right? E-bill of ladings, and EPODs, quicker, digitalized, removing back end type of stuff, but. There's all this. This would also improve the cycle times, right? Exactly. And when you talk about cycle times, and Zach, you know this very well. You can speak to this. We're studying the hours of service and the drivers, when they're on duty, off duty, that type of stuff in miles per hour. Just not a significant amount of increased speed, right? Not excessive speed, but driving faster and better utilization of drivers can dramatically increase capacity. Are we seeing technology and this type of thing affect this?
I mean, that's one of those big questions that we haven't been able to really pinpoint just yet. We're only seeing this over the last 4 days, so it's really difficult to really, tell if this is going to be some sort of long-standing fundamental change, or if we're just seeing like more regular freight patterns emerge. If you're out there and shippers are starting to be more reliable with their patterns, get more into a rhythm. A lot of what we've seen over the last couple of months has been irregularity. I mean, you have supply chains shifting all over the place. Seasonality basically has fallen completely to the wayside, so there's no way for people to forecast exactly what type of freight's moving when, all sorts of disruption in that regard. And so the uncertainty obviously is a big part of this play. The technology angle, though, I mean, I think that's an ongoing theme with what we're seeing, is that a lot of these companies are obviously investing more in technology as they're being forced into creating more operational efficiencies, figuring out exactly where they can streamline, in this high-cost environment. So I don't think it's out of the question that we're seeing a lot of people start to really manage their time a little bit more effectively. Drivers, of course, are trying to get out on the road and, work more efficiently and stay on the road longer. That's only, obviously when they're getting better utilization on their hours of service for drive time, that just leads to more money for them. So yeah, I think all of it is certainly a big player.
So Mike brought up technology.
Yeah.
Right, and that could be it. But I'm going to bring up the chart of the week that Zach wrote on Saturday afternoon about wait times plummeting. They're down about a third from, say, March levels. Do you think that has anything to do with maybe a leveling out of OTRI?
I don't think, I don't think it's out of the question, especially if carriers drivers are spending more time on the road. That's going to allow them more time to actually go and pick up more freight. Detention is an obvious time killer, time suck, just destroys operational efficiency. So if they're spending a lot less time on those docks and these shippers are utilizing this technology or just managing their processes a little bit better, that can make a tremendous difference in capacity. Saving 10 to 15% of your time a day is massive to a driver. So they're going to be able to go out and pick up more freight, not necessarily turn it down. Again, it's nothing to get too excited about just yet. We just dropped from 22.3% down to 21.6% on the tender rejection index. So it's still an extremely tight environment right now. And we consider that it probably will continue to be a tight environment. It's really just a matter of how efficient are people managing the capacity right now. And I think that it's obvious that they're at least making a shift towards a little bit more efficiency.
Makes sense.
It does make sense. We have some viewer comments here from kind of back into the news headlines. Mark Dowdy, I only see alternative powered vehicles being pushed in heavily polluted cities. It will be a generation before we see these in rural America. Justin Neal talking about the crash that we're just talking about. Very sad story. This is why collision mitigation systems are so vital to the safety of everyone on the road.
Amen.
And so thank you for those comments, and keep them flowing in here.
Yeah, absolutely.
Yeah. How about, so basically we saw a lot of trucking companies and fleets parking assets during the March, or at the end of March in the April lull. Are those assets maybe coming back into play now? Could that be a reason why OTRI is kind of flattening out?
Yeah, so I think that's definitely feasible. We just hit that point where, the first stimulus package expired. Carriers may be starting to come back online. A lot of these smaller fleets, of course, may be coming back into operation a little bit more prevalently, especially with such a strong operating environment that they're in right now. We're watching Class 8 orders increase sequentially the last 2 months. Obviously, these are more biased towards the larger fleets, but they are also an indication that there is some capacity coming back into the market. I believe I was talking to John Paul Hamstead the other day about how they were looking at some insurance information that validates this principle, that some of this capacity is starting to return to the marketplace, which again is going to pull those tender rejection rates down even further. So it's not flooding back into the market. I think there's still a lot of uncertainty out there, but we're at least seeing the reversing trend of people leaving the marketplace, and they certainly aren't parking their trucks anymore.
But to the extent they were before.
Exactly.
Yeah.
So you're talking about, you're starting to see people kind of dab their toe in the water, a little bit of capacity coming back online here and there. It's not flooding the market like it did in 2018, 2019, but at the same time, the reversing trend is what's important.
Yeah, you're seeing the outbound tender volumes, and you can see the fluctuations. I was talking to Anthony Smith about this. You can see the fluctuations in the different lengths of haul, right? Outbound tender volumes go up on the long haul, the tweener mid, and then they start hitting the city local, right, as things start to move. And you can look at, warehouse to warehouse moves, et cetera, and deliveries, DC moves, and see that. But they're all on the rise, right? So there's nothing even there that would suggest that there's less volume in certain areas that are more prone to tender rejections, like the tweener market. Isn't the tweener market one of the worst to really run in?
Yeah,
where
it's-
you can't really do it in a day, and you can't do it in 2 days. It's a day and a half type of thing, right?
Yeah, it's pretty rough. I mean, you're talking about that, they've got to stop and then waste half a day, on their hours of service. So it's, yeah, I mean, you can manage through it, but that tweener stuff is a capacity wrecker.
We are seeing a little bit of rise in the OTRI in the flatbed market, though. It's come up. It's stabilized a little bit, but over the last little bit, few weeks, it's been not meteoric or anything to write home about, but it is improving.
Yeah, we talked about this a little bit last week. The flatbed tender rejection index is, starting to come back up, which again is a good sign for the industrial sector of the economy, construction, et cetera. It's been obviously the weakest performer of the three modes that we track here on the outbound tender rejection indexes. You've got the van and the reefer rejection rates up over 20% for the month of August. Flatbed's been sitting down there under 8-9% for the last I think we had a little bit of a spike around July 4th where capacity would go offline, but at the same time it's just not been a sector that has had a very strong year. Oil and gas obviously very depressed compared to previous years. We've got WTI just now getting back over $40. Not necessarily enough to really drive a huge robust amount of growth, but at the same time, like we're talking about with capacity, it's kind of just trickling back in slowly, which I think over time is actually the right way. It lends a little bit more strength to the growth versus that immediate flooding of the market.
Yeah. Makes sense.
Very true, yeah. Thank you very much for that freight market analysis. Zach, we'll see you again Thursday, same time, same channel. Right?
I remember a show like that.
Yeah.
Yes. Same time, same channel.
Yeah. So, yeah, it's
Thursday. Who we got up next? We got Anthony Smith, our lead economist.
We do have our lead economist,
Excellent.
Anthony Smith, to talk about, I think, the Small Business Confidence Index that came out. What do we have on that, Anthony?
That's right, Kevin. So we got a few updates. First of all, we have small business optimism, and we also have job openings. The first thing that we saw with small business optimism was that the index decreased for the last month. And so the first thing to note is when we're looking at the Small Business Optimism Index, that this is a survey that's put out on a monthly basis, and these are results for July. So when we're looking at the numbers for July, we saw that it moved down to a score of 98.8 for the month of July. This is a 1.8 decline for the index overall. The report noted that even with states reopening, that there is still a lot of uncertainty for business owners. In fact, it showed that the uncertainty index increased to 88, and owners really continue to temper their expectations for future expansions in economic conditions as more uncertainty kind of came around COVID-19 throughout the month of July. In the index, when we looked a little bit closer into some of the surveys some of the respondents' answers, we saw that 21 said that they had issues finding qualified labor, and that was their top problem, with 37% of that coming from the construction side. So that was one of the issues, and one of the main issues that we saw with the construction segment over the last year or so was trouble finding qualified workers or skilled labor for that segment, and it seems as though that is still an ongoing issue even in the midst of the pandemic. One of the other areas that we saw changes in were for job openings. Job openings showed that there was an increase for job openings in the month of June. So this is a little bit lagged in comparison to those weekly jobless claims that we did see an increase in job openings for the month.
And Lee Robertson here, talking about the alternative fuels again. What is practicality of these clean alternatives across the board? Do you only look at over the road, or are there applications in other sectors? But I think it's more the local, kind of very 200-mile radiuses that the alternative energies vehicles will really get into.
Yeah, no, if you're looking at other than over the road, I agree with you. I think a lot of it's going to be localized. Mm-hmm. Right? So drayage operations within ports operations, yard hustlers, the yard dogs, your Ottawas, that type of stuff running around the docks. Heavy usage, obviously, there. And then your smaller, your Class 7s, Class 6s, your delivery trucks.
Yep. So, Anthony, really quickly, what are you expecting for the initial jobless claims number coming out Thursday? Do you think we're still trending down? Do you think we'll hit any hiccups with it?
For the upcoming jobless claim numbers, I do expect there to still be a substantial number overall, a substantial figure, I should say. I still think it's going to be trending downwards in that million mark or just over that million mark. When you look at what's going on right now, I think you have to really be cognizant of what's going on with the jobless claims bonus benefits that's happening. I think one of the things to kind of keep in mind is that there is indeed an incentive for individuals to file for claims if they're going to, make more on claims than if they were to return to the workforce. With the latest numbers being put out is that there's going to be a reduced overall weekly bonus for individuals that are filing for jobless claims, and I think that's going to lead to maybe fewer individuals filing for those claims. When you're seeing that maybe that trade-off is going to lean a little bit closer to returning to the workforce, because that's simply where the incentive is. If individuals can work safely and work, in a socially distant environment and make more than they would on those unemployment benefits, they might weigh the option and decide to return back to the workforce. And I think that will lead to some decline in the jobs claims for sure, as opposed to when there were, at $600 on a weekly basis, that may have been more incentive to, stay out of the workforce. And I think that was the, maybe part of the intention is to reduce people from putting themselves in danger or in harm's way potentially. And so I think when we're looking at the most recent week or the coming week, I think we'll likely see that there will probably be a decline, of course, with the reduced bonus benefits coming in. And I expect that to kind of be the trend throughout the remainder of the year.
Great analysis, Anthony. We'll be looking out for that number on Thursday when you come back on the show to talk economics.
Yeah, good stuff. I mean, labor, finding qualified labor, right?
Yeah, I know, right?
I mean, that's part of the heart of at the heart of the issue with the new stimulus check, right? Mm-hmm. Is you've got to reduce those benefits to incent people to work, but there's also this virus out there that
that Russia says that now they have an approved vaccine for this morning.
They
I saw the headline this morning.
And just said, hey, it works.
I know, right?
Yeah,
so there'll be a developing story for the entire world, but we'll see. But
let's go to our first guest. We've got Frank Adelman, who is president and CEO at Transflo. I believe he's there. Frank, how are you doing today?
Doing great, guys. Thanks for having me on your show today.
Hey, thanks for being here. You heard us talking about outbound tender rejections are a little bit down. They've kind of softened a little bit over the last few days, which would indicate that there's more capacity in the market, even though volumes continue to soar. They're above 14,000 now on our OTVI index, the highest point it's been in 3 years. You know a little bit about this space right here. Can you tell us a little bit about yourself and a little bit about Transflo and what you guys are doing there?
Yeah, sure. Thanks. So I've been president and CEO of Transflo since 2013. I actually came from the credit card arena. I was general manager at Comdata. So transactions are things that I grew up with, watching week to week, day to day, year over year. So yeah, we see a lot of the trends that you guys see, and we see them firsthand. And in fact, I think yesterday even was a little softer than we had anticipated. So don't know what that says about the future, but I think the market is in fact coming back where we see it. Transflo, as you may know, is we started in the imaging business back in '91. It was actually one of the first green moves, if you could believe it. The ex-owner of Land's End, a guy named Gary Comer, was way ahead of his time there and really invested in imaging to get rid of paper. But as we see today, there's still a whole lot of paper around in the marketplace. Transflo today is probably one of the largest digital platforms in the transportation industry. We support over 1 million truck drivers with mobile apps, as well as over 60,000 carriers and freight brokers in the marketplace today. So we drive efficiency and automation, and certainly are excited about the place we hold in the marketplace.
So Frank, tell us a little bit about your new partnership with KBX and about EBOLs and EPODs, which are part of that.
Yeah, so KBX, as you may know, is the logistics arm of Koch Industries. Koch Industries is a $115 billion industry with 16 different family of companies, one being Georgia Pacific is probably a recognizable name. KBX came up with a solution primarily to promote safety and efficiency in their family of companies. And in doing so, what they discovered real quickly was that the technology was good, but the adoption was lacking a bit. And so when they went to their customers, carrier customers, to determine how could they drive adoption in their carrier base, they discovered that 64% of their carriers already utilized the Transflo solution. And so that equated into probably over 75% of their total volume. So it made sense for them to kind of reach out to us, try to understand our platform, how user-friendly it was, the driver adoption rate, things that made critical sense for them to deploy this technology. So we worked together with them, a great bunch of developers, technologists that they have in their company, and came up with a solution now that we're deploying throughout the family of their companies.
Very, very interesting stuff. So you guys, I mean, you're very well ingrained with and working with the carriers and driver focused historically, right, at Transflo. And one would look at this type of technology that you're talking about there. So in the same vein, but how have you found the conversations with the shippers related to the EBOL solutions and the EPODs?
It's been really interesting in that historically, Transflo has been more trucking company driver centric, and we've not really dealt with the shippers directly. And what we've discovered is not only are the shippers very engaging and interested in providing this kind of health safety tool to their carriers, but what we've discovered is that we're already processing a significant amount of their documents, whether they're bill of ladings or proof of deliveries, through our data center. We're already digitizing those documents. And so it's made it quite easy for the shippers to grasp the concept, number one. Number two, it has been very energizing for them to see that we're not looking for huge capital outlay here. We're driving an integration layer to their back office that allows drivers to interact with that solution, regardless of whether it's a homegrown solution, whether it's a custom solution, whether it's a standard solution on the marketplace. So very engaging, very energetic, and I think that we will see significant volume moves to this type of technology in the very near future.
So, Frank, how has COVID-19 and the response by shippers and carriers accelerated this drive to adopt EBOL solutions? Has that accelerated the drive to go paperless?
Yeah, you know, the health concerns are real. You know, drivers dealing with receivers, with shippers, even in truck stops. And so I think that it's placed a great emphasis on from a health perspective, but I think that once we kind of dig down a couple layers, driving workflow efficiencies, accuracy, all in real time and better visibility have tended to play a bigger place and to outrun the health factor in that now, in the fact that we're not asking anyone to try to standardize the solution. All we're asking is that let's integrate the solutions that are available and give that driver an interface, a UI that is one that they can deal with and that they're already dealing with on a daily basis.
Yeah, that makes perfect sense. From the health issue, the speed issue at pickup and delivery, it solves a lot of problems. And I can imagine with the shippers and the consignees, we'll call them both in the same vein, right? The shippers and the consignees. Beyond the ease and the instant, transparent data of delivery and pickup, it's on the move. Just maintaining your inventories and movement of your inventories and understanding exactly where they are an hour or 2 hours early before somebody has to type in all that information off of a bill of lading and put it back into the room. That's got to be huge savings and improvements in efficiency. Just that portion right there alone, right?
Absolutely. And the key really is provide that driver with a generic interface. So the things that you can automate and prompt that driver through, regardless of the shippers that they're pulling into which lot, make it easy for the drivers, increase adoption, increase the accuracy, and again, provide more visibility in a real time.
So, Frank, how do you envision Transflo participating in the digital freight marketplaces that are coming online right now?
Yeah, interesting, because we do have a solution out there in several major brokers that are. What the broker saw was that in order to establish really a digital footprint, they were looking at literally years to get trucking companies to install their apps. And what they saw in Transflo was this kind of generalized app that already exists throughout the marketplace with tens of thousands of drivers. So we allow brokers to leverage their brand through our platform so that they're not establishing and trying to go out and download one by one driver. We're giving them access to literally thousands of drivers with the turn of a switch.
Really good stuff, Frank, and thank you so much for being on today. We're out of time here, but where can people get to? How do they get to Transflo? Learn more about what's going on here. Engage with what you're doing there, and your transparency and your digitization of the bill of ladings and PODs.
Yeah, just go to transflo.com and you'll find whatever you need there, plus some, I'm sure.
Excellent stuff. Thank you so much, Frank.
Thanks, guys, for having me today.
Absolutely.
Thank you.
Yeah, it's these
paperless, right?
It's efficiencies we should have been focusing on anyways that are moving forward. That's interesting to me. It's these things that we've talked about and seen adopted in some areas, but now it's improving. I mean, it's accelerating, which is great in this industry. I mean, I grew up in this industry when I pushed a cart around a break wall dock and literally took out every way bill and added them up, went around 200 doors, and then typed them into the AS400 and sent Twix messages across the dot matrix printers to 900 terminals throughout the system so that they would all know what was happening at our facility. By the time I typed it in there, the first one was 3 hours old.
Yeah, I know, right? That was a long time ago.
It was a while ago, bro.
It was.
It's crazy, but we've got our next guest, right?
Andrew Lockwood. He's from Suddath Global Logistics. He's a senior manager of solutions and a friend of mine, joining us from Orlando, Florida. How are you doing today, Andrew?
Hey, doing well, guys. Appreciate you having me on.
Yeah, definitely. So give us a little bit of background on Suddath Global Logistics and yourself.
Yeah, so I'll talk about Suddath here. The Suddath company is a 101-year-old company, traditionally really known for the moving and storage aspects of the business, but in recent years have really gone into the logistics space. We do a lot of different things. I think that's the exciting part. We still do the traditional moving and storage for household goods. But we've got warehouses, we've got assets, we do brokerage, transportation management. If your office is moving across town, we can, we've got a method and a madness for packing it all up and making sure that the workstations, arrive just exactly where you want them. So we play in a lot of spaces, but it's an exciting time in logistics, Kevin. And Michael, to your point, I think that's what keeps me in this industry is like the accelerated pace of which things are changing. Is super.
So another thing that you guys are getting into is final mile. So can you give us your take on the final mile market.
Hey, first of all, along your question.
Yeah.
But I really wanted to have him start with this.
Okay.
Define final mile for our people, because I could talk to 10 different people and they'll argue 10 different things.
That's a really good question.
What is your definition of final mile? What are you playing, and what is the definition of what you guys are playing at?
No, it's a great question, because you're exactly right. Everyone's got a different idea in their head of what final mile is. A lot of people think, it's the Amazon guy hopping out of his van and dropping off the package at my door, and that is final mile. I would define it as anything from the local or regional distribution center warehouse to your doorstep. That's final mile. And so working upstream, then you've got middle mile moves, right? The between warehouses or picking up at a manufacturing location to a warehouse. And within final mile,
Andrew, when you say to your doorstep, you're talking about consumer or business, right? Because there's B2B final mile as well, right?
That's right. So it does take on both aspects of the residence, or a B2B move. But there's two within final mile, and it's a good place to go here. Within final mile, you've got to the threshold, really, and this is Amazon, right? This is you order your groceries through Whole Foods. And they bring it to your doorstep. But there's also, and this is what I'm excited to talk about today, the inside delivery, what's traditionally been known as white glove. This is a little more customized, tailored, personalized. It is the extension of your brand in somebody's home, and that's the other aspect of final mile.
So another aspect of final mile, and we talked about this earlier, and we wrote a paper, Seth Holm wrote a paper here at FreightWaves about it, is even hard to define the size of the final mile market.
Yeah.
I mean, those definitions range all over the place. So let's leave that to the side right now, because no one knows the answer to it, and talk about the fastest growing segment of final mile, and that's kind of that service-based, beyond the threshold.
So that's the white glove
delivery.
through
White
the threshold
glove,
or over the threshold type of stuff. I was in that space a while back, and in Florida actually, which was hard, right? There's a lot of challenges there. I'll let you speak to them. Go ahead.
Yeah. Oh gosh, where to start? I mean, you look at the last 4 months, and I think with COVID here, it's only accelerated a lot of the changes we were seeing already. But when you're in people's homes, when you're, you get stranger danger, right? I don't know who this guy is that just pulled up to my house with a truck, but I know he's got to get the couch in his truck, from his truck into my house. There is a heightened awareness. And one phrase I shared with Kevin yesterday, this is really the fulfillment of expectations that comes with the point and click, point of sale. You order something online, you get the instant gratification. I've bought this piece of furniture or this stationary bike. And so that fulfillment of that has now shifted from the bricks and mortar to it's in your house.
Right. And that customer-centric focus has to go all the way into your house, right? So you get that instant gratification whenever you click and you buy. It's got to be delivered, on time pretty quickly, but then that installation point, you follow through for that beginning, the cradle to the grave type of customer-centric solution. Can you talk a little bit about that?
Yeah, I mean, I think it's really a customer experience play more than anything. It is logistics, right? Because you're still getting it from point A to point B. But I think that's what is separating some of the industry right now is, companies that have been in traditional transportation, it's dock to dock. And we've been doing that for years. Now, you're seeing this incredible growth rate of items purchased online that are now being delivered into people's homes, not just at the threshold, into their homes. And so the method and the processes of how you do that. I mean, Michael, you asked about the challenges with that. There's the vetting of drivers, right? So you've got to make sure these are credible individuals that you're not just putting behind a truck, but that have the customer service skills to deal with people in their home. There's just an entire customer service aspect to this, starting with the appointment scheduling and the calls. When do you want to be there based on your other stops that you need to make with your route? So you're confirming this back and forth with the customer. There's a lot more there with the communication and the meeting of expectations than most people realize. And Kevin, I think this is what makes it really hard for some traditional transportation companies to get right. But the other side of it, if you look back to the origins of FedEx, They found in the 1970s just this opportunity to do what the USPS was doing better in a faster way, in a more efficient way. So, and that's the same opportunity that I see right now in this industry.
Yeah, it's interesting, Kevin. I mean, you talk about the difficulty of others that want to get into this, getting it. They don't understand what this. The person that's this driver, first of all, a qualified driver, who then brings this into your home.
It's a completely different business model.
They're a sales rep, they're a customer service rep, they resolve issues, they've got to be able to interact with people, and then many times, I don't know if you get into this, maybe you can talk to that, but they have to be technicians and knowledgeable about the actual product they're delivering. They're an extension of your customer, Andrew. They're not just an extension of Suddath. This is, when I was doing it, it was Sears Logistics, right? So my drivers, they were Sears as far as the customer was concerned. And if the customer didn't like those drivers or what was going on, we were incented to make sure those people liked our drivers, right?
They're almost, the drivers are almost, they are more technician / sales / customer service that happen to drive. And I think that's what we talked about a little bit yesterday, right, Andrew?
These guys are the multi-tool, shortstops, utility infielders of logistics. And I think that's the part that I like about it. There's a lot of MacGyver qualities to these individuals. The beauty of it, if you put somebody behind the wheel of a 26-foot box truck, less than 26,000 pounds, you don't have to have a Class A or Class B. So that widens the driver pool. You have to have the customer service skills in those aspects. And then I think as a company, you've got to draw some hard lines in the sand. What are you willing to do and not do? Let me throw out an example. Gas lines with certain appliances. That's something most companies are going to shy away from. Your risk and your legal departments, they get a little iffy on that. And so I think you've got to define what is your risk tolerance as a business. What are you willing to do inside somebody's home? So where I think this matches up really well, at least for here at Suddath, we've been in people's homes. We've been moving their goods for so long. We're very comfortable with that aspect of the business. Matching that then to the e-commerce piece of logistics is really a natural fit in a lot of ways.
So
it makes sense, man. You get your Amazon package and your washer and dryer installed by Suddath.
I know, right? But
all on the same day.
Here's the real question: what drives profitability in final mile?
Excellent question.
That's what a lot of people don't get right about it. So what drives profitability in final mile?
Yeah, the $1 million question. This is a volume game. So just to give you an example, and Michael, you've done this in Florida, so you know. Around your big metro areas, you've got to get 6 to 10 stops or more per day for this to be viable. And I think from a price sensitivity standpoint, what I'm seeing in the general marketplace for just final mile, you're seeing estimates range from $100 to $250 per delivery. Some of that is a reflection of what consumers are buying. If you're buying a $10,000 couch on the high end, there's a price sensitivity for that specific type of consumer when it comes to the actual delivery and putting it in place. Back if we reverse time here, the old model was, hey, pull up to our warehouse, put it in the back of your truck, good luck, we'll see you later. And now there's more of an expectation that you have these service capabilities. But it is a gritty business, which kind of draws me to this specific niche in the transportation industry, because it's hard. You've seen some big players exit white glove final mile. And they said, you know what, not a core competency for our business. We're going to do other things. There's a lot of small players here. And I think that's what makes it really tough is within white glove final mile, you've got local and regional mom and pops. And then on a national scale, you have very few big players that have the comprehensive network. But more than that, they have the quality and the consistency of that platform so that from a brand ambassadorship standpoint, it's a consistent product.
Yeah, it's not one of those things you can kind of do.
No, you can't just kind of do. You can't dip your toes in the water. You gotta go do it. And I think with you, Suddath has a very good player to go out and do that. But we're kind of running out of time for the interview, Andrew. But thank you so much for joining us today.
Appreciate it, guys.
Yeah, definitely. And how do people learn more about Suddath Global Logistics and yourself?
Yeah, hit us up. Our website's Suddath.com. You can learn all about our company there. Find us on LinkedIn. We'd love to connect with you and talk logistics more in that channel as well. So, Thank you, guys.
Thank you.
Thank you, Andrew. Yeah, interesting stuff. I was in
Yes.
there, boy.
The what?
Send a driver in to install a refrigerator and washer and dryer into a 12th floor condominium where the people are not going to be home for the next 6 months. And then pray there's no water leak.
Yeah, I know, right? That really is.
You got to know what you're doing, man. You got to know what you're doing.
Carlos
Let's move on.
Lovesuch. There it is. Service to the customer, and that's final mile. That's
Amen.
the essential final mile piece that
Yes, it is.
that you have to be successful. So
It absolutely is.
yeah. So, I
hey,
think we have some good news.
We do. Well, we got some announcements, so let's go for it here. Announcing Carrier Summit keynote speaker Philip Stutz, founder and CEO of Win Big Media, founder and chairman of Go Big Media. Philip Stutz will take the virtual stage August 19th as the keynote speaker for FreightWaves Carrier Summit. You got your tickets?
I have my tickets.
You don't have
definitely.
tickets. You know why? You
that's
don't have to register, and it's free.
True.
That was a trick question. Sorry,
Oh.
Kevin.
It's a
Anyways,
free ticket.
yeah. So
Like a
Philip
golden
Stutz, he got the golden ticket. Philip Stutz is the founder and executive chairman of Go Big Media and the founder and CEO of Win Big Media. Philip has made more than 260 national media appearances, worked with multiple Fortune 200 companies, and has over 2 decades of experience with billions of dollars in political ad spend, which is interesting. Philip Stutz comes from the cutthroat world of political marketing. He plays the game of marketing on the highest level, battling it out with fierce competition, as you can imagine in political advertising, right? Multi-billion-dollar budgets and a win-or-die mentality. In an age where carriers need to win with better recruiting and retention, you have the chance to learn from one person who has implemented similar marketing strategies for presidents and Fortune 200 companies. He's a powerful guy.
He's a powerful
This
guy, and
he is a must listen to and must see.
It is, because another cutthroat business out there in trucking is recruiting.
Yeah.
Getting
Yeah.
drivers, and there's a lot of digital ad spend, that's one of that is the biggest department.
Yep.
Administrative off the road.
100+% turnover.
Yeah, I know, right? You have this huge recruiting department. You have these huge online, print, any type of media you can get your hands on, social media,
Right.
advertising budgets. So it's a must listen to for all trucking
Oh,
executives.
absolutely, and he'll be on. He's keynote August 19th. So the Carrier Summit, FreightWaves virtual event Carrier Summit is the 19th and 20th. It's a day and a half, correct?
It is a day and a half.
It is a day and a half, and so and Seat My Trucks. So FreightWaves and Seat My Trucks are presenting the Carrier Summit on recruiting, retention, regulation, operational efficiencies, and maintenance. So it's broken out into different parts, so you can catch those different parts. And as always, it's a virtual event. Attendance is free, and there's no pre-registration required. So show up, get in the Slack channels.
Yeah.
It's really a great networking event and tons of information. As we said, recruiting, retention, regulation, operational efficiencies, and maintenance. Going to be a great informative show.
It is. We're going to have a lot of stuff on recruiting and retention. We have things on detention. I mean, just all across the board. All the hot button issues in trucking and logistics today. So join us August 19th.
Between now and then, what do we got? Between the 19th, which you'll all be attending, I assume. What do we got between now and then? Put that
2
coffee
p.m.
down. What you got? Oh, today.
2 p.m. We have great quarter guys, Andrew Cox and I think Seth Holm will be joining us, and we'll argue about some market trends and conditions.
Great.
SPACs are in the news. There's a few other things, maybe the college football season, and
mania
we'll
season.
sit around and debate those and probably disagree quite a bit on a lot of those. And then put that coffee down, 12 p.m. tomorrow with Dooner. It's our Freight Sales Podcast, and we have Steve Ferrara from Ocean Audit coming in, talk about presentation. He posted a presentation that he does. OK Boomer, the OK Boomer Show, yes.
Yeah, right.
His presentation that he uses, and it's very clean and concise, and it's something that a lot of salespeople struggle with is how to do a nice slide deck that's not too much information, but just enough.
Are we
So
witnessing
that's
the
what we're
dangers of the final mile of a journey right now?
We are, yes.
Is that what we're watching?
We are.
We got Midday Market update, though, on Thursday as well.
Yes.
Ryan Hofek is COO at DCLI. So we're talking about chassis management, the whole industry of chassis management, regulation that's coming up that people need to be aware of that is kind of sketchy, and the whole thing about gray fleets. We've got that. And then Thursday, I'll have Anthony Smith, and we'll be breaking down the data in Sonar along with the latest economic data and bringing that to you and kind of showing you how now you can look at different parts of the trucking data and see what's moving in the different verticals, so you can strategically place your business, your assets, and work with those. So, hey, until then, peace and love.
Yeah.
Kevin?
Peace and love. That wraps it up for this midday market update.